All right. Hey, everyone. Welcome back. Get ready because we're diving deep today into the latest budget changes and, how it could impact your wallet, your finances, all that. I know taxes, they can be a little bit like trying to solve a puzzle, right? A
Really?
little overwhelming sometimes, but we're here to like break it down, make it clear, even fun if we can. And the crazy thing is we're even going to look at how you might be able to pay absolutely zero tax.
Yeah, there's some pretty big changes in this budget, and getting to know them, understanding them could really, really help you out with your money. So today we'll be breaking down the new tax regime, looking at those slabs everyone's talking about, and of course that rebate, it's a big one.
Yeah, for sure. We're going to help you figure out if this new system, if it even makes sense for you. It's like picking the right tool, right?
Absolutely, yeah.
Got to have the right tool for the job. So let's start with the basics of this new regime, the tax slabs. It's set a little differently than the old system, so listen closely. All right, if you're earning between 0 and 4 lakh, well, congrats, you're in the no tax zone, you're good.
Okay.
Then from 4 lakh to 8 lakh, it's a 5% tax rate. And moving on up, if you're earning 8 lakh to 12 lakh, you'll see a 10% rate.
Yeah, and if you're making between 12 lakh and 16 lakh, your tax rate's going to be 15%. Then it jumps to 20% for earnings between 16 lakh and 20 lakh. And then from 20 lakh to 24 lakh, it's a 25% rate. And finally, if you're making over 24 lakh, the highest rate kicks in 30%.
Okay, so yeah, a lot of numbers there. I know. But stick with us. What really caught my eye, though, is this whole zero tax up to 12 lakh. Like, how does that even work? It sounds almost, I don't know, too good to be true.
Well, that's where the rebate comes in. With this new regime, if you're earning up to 12 lakh, you get a full rebate on your tax liability. And then when you add in the standard deduction, which is 75,000 lakh, that brings your tax-free income effectively up to 12.75 lakh. It's a pretty big deal, especially for those folks, in that middle income bracket.
So, like, let's say you're earning, I don't know, 11.5 lakh every year. How would that work to wipe out your tax liability?
Okay, so with 11.5 lakh, you'd technically be in the 10% bracket, right, for that income over your lakh. But because of that rebate, your whole tax liability, poof, disappears. You end up paying zero income tax.
Wow, that's amazing. Okay, now I also heard about this this thing called marginal relief,
Yeah.
but I gotta be honest, it sounds a bit confusing. Can you explain it in a way that even I can understand?
Sure, yeah. Marginal relief, basically, it prevents you from getting hit with a huge tax bill just because you earn a bit more than 12 lakh. So imagine you're making, say, 12.2 lakh. Without marginal relief, you'd be taxed on the whole amount, the whole 12.2 lakh. But with the relief, you only pay tax on that extra 20,000, the part that's over that 12 lakh limit.
Oh, okay, that makes more sense. So it basically makes sure that earning a little extra doesn't mean you're suddenly paying way more in taxes. But I have a feeling there's got to be a trade-off somewhere, right? Like
Yeah.
there's no such thing as a free lunch, as they say.
You're right. Yeah, there is. This new regime, it offers fewer deductions. You still get the standard deduction, the 75,000, but a lot of those other popular deductions, they're not available anymore.
Okay, so like what kind of deductions are we talking about here? What are we giving up for this potential zero tax situation?
Well, for instance, you wouldn't be able to claim deductions under Section 80C. That's for things like um, your life insurance premiums or contributions to the Public Provident Fund. And then deductions for medical insurance, that's Section 80D, house rent allowance, that's HRA, your travel allowance, LTA, those are gone too. And there are a few others.
Okay, so basically it simplifies things, this new regime,
Yeah.
but it also gives you fewer ways to lower your taxable income through those specific deductions.
Yeah, that's a good way of putting it.
Now, I'm sure some of you out there are thinking, wait, is the old tax regime, is that still an option?
It absolutely is. And for some folks, it might actually be the better choice. Remember all those deductions we just talked about? Well, those are all still available under the old regime.
Okay, so then how do we figure out which regime is right for us, for our own situation? That's got to be the tricky part, right?
Well, it really depends on your individual financial picture, right? Like, what's your income level? What are your investment habits? Do you usually take advantage of a lot of deductions? These are all things you have to think about.
So it sounds like we need to weigh the simplicity of the new regime and that potential for zero tax against the possibility of saving a lot with those deductions in the old regime.
Exactly. And, while we're trying to give you a good overview here, it's always a good idea to talk to a tax advisor, get some personalized advice. They can really help you analyze your specific situation and figure out which path is best for you.
Yeah, that's a great point. Okay, so before we move on, let's do a quick recap of what we've covered so far. We've looked at the new tax slabs. We've talked about that amazing rebate that could make income up to 12.75 lakh tax free, and we touched on the fact that the old regime with all those deductions, it's still a real contender.
Welcome back. Glad we're taking a look at this old tax regime because, like we said, it might still be the best way to go for some folks.
It's kind of like, those classic albums you rediscover, right?
Yeah.
Sometimes the old stuff is still the best. So let's get into the details of this old regime. First things first, those tax slabs, right?
Right, yeah. So with the old regime, income up to 2.5 lakh, that's still tax-free. Then from 2.5 lakh to 5 lakh, you're looking at a 5% tax rate. And then moving up, income between 5 lakh and 10 lakh, that's taxed at 20%. And finally, for anything above 10 lakh, the tax rate jumps to 30%.
So looking at these slabs, they do seem a bit higher than the new regime, at least at the beginning. So what's the advantage here? Why would they choose this over the new option, the one with that rebate?
The big difference, like we talked about before, is the deductions. The old regime, it has this whole bunch of deductions and exemptions that can really lower your taxable income and potentially, end up with a lower tax bill overall.
Okay, so let's break it down, these deductions. What are the big ones here?
Okay, well, one of the most popular ones is Section 80C. It lets you deduct up to 1.5 lakh per year for a bunch of investments and expenses, like contributions to the public provident fund, life insurance premiums, even your kids' tuition fees, stuff like that.
So if you max out those ADC deductions, that's a big chunk of income that you're basically protecting from taxes, right?
Exactly. That's just one of them. We've also got Section 80D. That's for health insurance premiums. You can claim deductions for what you pay for yourself, your spouse, your kids, even your parents.
Right. Yeah, that's a huge one, especially with healthcare costs being what they are, going up and up. What other deductions are there that people might want to know about?
Well, if you're renting a place, there's the house rent allowance, HRA, that can lower your taxable income too. And then for those who like to travel within India, there's the leave travel allowance, LTA. That gives you deductions for travel expenses.
So it sounds like this old regime, it's all about using these deductions strategically, minimizing your tax burden. But how do you know if it's the right way to go for your situation specifically?
It all comes down to analyzing your financial picture. You got to really look at your income, your investment habits, and how much you could potentially use these deductions. If you're already investing a lot in tax saving stuff, or you have a lot of eligible expenses, the old regime, it might actually save you a lot of money on taxes.
Yeah. So there's not one answer for everyone, right? It's really about finding the regime that fits your goals, your financial habits.
Exactly. And remember, we're giving you a broad overview here. It's always a smart move to talk to a tax advisor, get that personalized guidance. They can help you navigate all the details of both regimes and help you make the most informed decision,
Yeah, absolutely. Having a tax expert on your side, it's like having a guide in the wilderness, right?
That's a good way to put it.
Leading you through the jungle of taxes. All right, so we've gone over the ins and outs of both the new and old tax regimes. We've seen the good and the bad of each, and hopefully you're starting to get a sense of which one might be the right one for you. Welcome back. All right, so we've spent a lot of time talking about those tax regimes, right? But now we're going to dig into some other interesting parts of this budget, stuff that maybe isn't getting as much attention, but could still really matter for your financial planning. It's like finding those hidden tracks on your favorite album,
Yeah, exactly. There are always those little details in these budgets that at first you might think, okay, whatever, but then they can actually make a difference in your finances.
So what are we looking at today? What's hidden in the fine print of this budget?
Okay, well, let's start with some changes to TDS and TCS. You've probably seen those letters on your financial statements.
Yeah, for sure.
TDS, that's tax deducted at source. Basically, it's like Prepaying some of your taxes. It gets deducted from certain payments you get.
Right, like when your bank takes out TDS on the interest you earn.
Exactly, yeah. So what's happening is the government has adjusted those limits, those thresholds for TDS on different payments. So in some cases, TDS might not kick in until you're earning a little bit more than before.
So maybe a little more money in our pockets for now, at least until we file our taxes.
It's possible, yeah. But it really depends on where that income's coming from. It's definitely something to keep in mind and maybe chat with your tax advisor about. Now, TCS, that stands for tax collected at source, and that one applies to people selling certain goods.
Can you give us an example of how that works?
Sure, let's say you're selling, I don't know, a used car. Before, you might have had TCS on that sale. But with these new changes, some types of goods might not have TCS anymore.
Interesting. So even though these TDS and TCS changes aren't, making headlines, they could still have a small impact on our cash flow.
Exactly. It's all about those details. Now, let's switch gears a little bit and talk about the National Pension System, NPS.
Oh yeah, the NPS.
Mm-hmm.
That's a popular one for people, thinking about retirement. What's going on there?
Well, the budget has this proposal to let you deduct contributions that you make to the NPS Vatsalya scheme. This scheme is specifically for minors, so parents or guardians can start saving for their kids' retirement early on. And the interesting thing is these deductions they would be under the old tax regime.
So that's another plus for people who stick with the old tax regime, like a little bonus for those who are really into maximizing those deductions.
Exactly. And speaking of bonuses, there's some good news in this budget for senior citizens too. They're proposing to double the tax deduction limit for seniors.
Oh, that's great. That's really good to see. Support for seniors, they've contributed so much.
Absolutely. And if we zoom out a bit, look at the bigger picture, it's clear that this budget is really focused on helping the middle class.
Yeah, I see that. From the higher tax-free income limit to all these deductions and exemptions, it seems like the government wants to give some relief to middle-class families.
That's right. The idea is that this extra money, it'll encourage people to spend to boost the economy, have a positive effect overall.
Well, we've covered a lot in this deep dive. We went through the new tax regime, the old one, even found some hidden gems in the budget. Hopefully you're feeling a bit more clear on how to handle all these changes.
Absolutely. And remember, there's no magic answer when it comes to your money, right? It's all about thinking about your own situation, maybe talking to a financial advisor, and making smart decisions that fit your financial goals.
And like always, stay curious, keep learning, and don't be afraid to ask questions. Thanks for joining us on this journey through the budget. We'll see you next time for another deep dive.